I appreciate y'all joining. My name is Steve Olson with the Peak Group. We have been working on what we're about to talk about today for a long time, and it's we're excited to finally be able to roll it out because I do genuinely believe when it comes to single family new construction investments, these are some of the best ones there are out there. I look at a lot of these things and um, good solid numbers and fair underwrite. You know, there's no pie in the sky stuff going on. I do see that happen from time to time. So we're happy to walk through it with you and appreciate your time today. So like I said, we'll take questions at the end, or you can put them in the chat and I'll address them at the end. Sometimes people email in questions as well, and we will address those too throughout the webinar. So yeah, thanks again. Let's go ahead and get started. Many of you I've spoken with before. Some of you are first timers to one of our webinars. We typically do these every couple of weeks. Um, so this slide is not new to many of you, but some of you it is, right? The Peak Group is an integrated platform, right? We all want to invest in real estate, but we'd all like to have somebody else do the work associated with it. And that's what we're here for, right? Identifying these quality investment opportunities and sourcing them for you, whether it be through some of our strategic joint venture partners, because we are a builder, used to operate as a REIT. So we are deeply connected in that world. You know, when it comes to a joint venture, we found that small regional builders are perfect for what we do. When you get up too big of a builder like a Lennar, it just gets to be too much brain damage. But that doesn't work very well if you don't have property management on the other side. And I have been in this business long enough to realize that when the property manager is a third party, i.e., the builder or the developer, doesn't have any skin in that game, it can be problematic, right? Especially in build to rent, when you turn over a project, you're going through that initial lease up. It's an easy time for people to point fingers. Oh, it's not leasing because the builder did a bad job, or no, the property manager is incompetent and they're trying to blame us. I've seen a lot of finger pointing. But when they're the same group, you can't do it. It takes that away and it aligns those interests, which I think is one of the biggest keys to investing in real estate, is aligning your interest, right? Everybody kind of acts in their own self-interest. So if they're the same, then our chances for success increase dramatically. And as I mentioned to you before, we are a general contractor. We build in the Dallas-Fort Worth market and the Birmingham, Alabama market. And in Savannah, this is going to be the case pretty soon too. We are absorbing a builder that we work with there and partnering with them on this. Not just like a joint venture, but we are the same, right? Sharing in the end result. So really pumped to be in the market. We are investor focused. We are not retail buyers. We get asked every now and then, hey, can you build this property for me? The answer is no, right? We kind of have a cookie cutter thing that we do that we know that works, right? And this stuff is generally not available to the public. You may see it listed from time to time, but we always bring it to our investors first. They are well tailored for out-of-state investors. Many of you live in markets where it just doesn't make sense to invest, where the rent to value ratios are crazy. The landlord tenant law is completely insane, right? The minister of housing, his name is Ho Chi Minh in a lot of these places. So you like to go somewhere where it works a little bit better. And then we want that long-term strategy where we know that we're likely to just see some steady growth. We're not likely to see a bunch of volatility, right? I'm just was grappling with a refinance on a duplex I own in Indiana before this call. I bought it in 2017, and this thing has just chugged along for me. Famously, I'm doing a cash out refinance for $110,000. I'm still going to be positive a couple $100 per door on that duplex. That's the magic. That's an example of a property that was purchased in a good area and managed well, where you sit back and you let time do its job. And I am confident that these houses in the Savannah metro could do the same for you, because they're in a good, desirable school district. We'll get into all that kind of stuff. They're in a place with low unemployment that people actually want to live. Let time do its job, right? When they say compounding, the best thing you can do to compound is let it happen, right? And stop changing strategies. Let's just let time do its work. So we always like to highlight, this isn't the only thing that we're doing. We're up to a few other things, right? We've got a couple of duplexes just finished up in Fort Worth, Texas. We're on our way out of that project almost. right? This is a great one for somebody who wants a low entry cost into one of the fastest growing markets in the country, which is Dallas Fort Worth, right? These are 5 miles from downtown Fort Worth. They're 4 miles from Medical City. My slide here is a little outdated. It says to be completed in the next 45 days. I think we've got C of Os coming through any second on the first two of these. DFW will outpace Chicago as the third largest metro in the country sometime in the early 2030s. It just keeps going. If you've been there, you can see it just going forever in every direction. And these are probably the lowest cost new construction multi deals in Dallas Fort Worth at 389. They are tailored to people that work in Medical City or downtown. This isn't somewhere that you move if you've got a bunch of kids that you want to go to school. In fact, you could characterize this as it's probably a high C class neighborhood, but it's changing by the minute. There's a ton of new construction going up. People are snapping up those infill lots because it's affordable and it's close to downtown and it's in a federal opportunity zone that's driving more capital into the area. So a great incentive on those is the 4.99 interest rate on the 30-year fixed, right? So we have a cap rate at 6.2, and there's no funny business with the cap rate where there's some free management or other things built in there. It's a bona fide cap rate. So when you get a cap rate that's 120 basis points higher than your interest rate, you get a cash flow. And so they get sold with tenants in place, warranty in place. Pretty easy way for you to dip your big toe into the multifamily world. So you can certainly reach out to us about that. If you're looking for affordable single family homes, Birmingham is the place. We're working on a better picture there of that thing. But, we build these 3-bed, 2.5-bath boxes in Pleasant Grove and they rent quick. We had one go vacant last week and we got 5 applications before we had even finished turning over the property to re-rent, right? There's a lot happening on that side of town. Birmingham Metro has the second lowest unemployment rate in the country. Right. And people just kind of they don't give it enough credit. They write off Birmingham, but we had a 6% population growth between 2022 and 2023. Sorry, that's a typo. I got to fix that. 2203. That's pretty bad if it's 200 years, but you get the idea. A couple of years, 6% growth, low unemployment rate, and still a very, very low purchase price because it kind of flies below the radar. That particular house is rented with a tenant in place at $18.50 a month, and we're buying your interest rate. We've contributed 5 points of the purchase price when you use our preferred lender to get you down to 5.375. And that was costing a decent chunk of money a few weeks ago. Even more so now, rates have crept up a little bit with the unrest in the Middle East. So getting those 30-year fixed rate deals is important. Finally, some of you have talked to me about this. We've got great duplexes going up in Fort Wayne, Indiana. This is a joint venture, but not really because I myself am a principal in the project, right? This is in Fort Wayne. It's about 8 miles from downtown. Great tax abatement in place. You'll operate these things with much lower property taxes for a number of years, which helps with your stabilization, which helps with that period where, we're getting a lot of units on the market and rented. But it's the fastest growing metro in the Midwest. It has the 4th fastest rising rents in the nation. Units sell for $250 a door, and that gets you a 3-bed, 2.5-bath. And when you have that tax abatement in place, it's an 8% cap rate, which it should be, right? Because it's pre-construction. You got to go through the build and the lease up, and you need to be rewarded accordingly on those deals. This was a project that included fourplexes, triplexes, and duplexes, but we have now sold out of all of the fourplexes. We're down to a handful of triplexes and duplexes in the project right now. So great deal. We actually, I was on the phone before I was dealing with my refinance, walking an investor through the project. He's going to be there in a couple of hours, checking out some of the vacant units that just turned over. But those are actual, well, the top left is a rendering, but they look pretty dang close to that. Grass isn't that green yet in Indiana, but that's the actual kitchen. That's an actual shot of the bathroom. We put granite and stainless LVP floor. I love the kitchen island because you can pull kids up to there and kind of have more room in the family room for the TV and such. And not flashy, but 2 things I love about this. There are 2-car garages, which in the suburbs is important, with 2-car driveways. I believe that until the end of time, death, taxes, and tenants will complain about parking, right? They just do it. And most cities require, 2 quarter parking spots per residential unit in a place like this. Well, we've got four with the two in the garage and the two in the driveway. They'll still complain. Don't get me wrong. You give them 10 parking spots and they'll find a way to complain. But that's great. Great for tenant retention. And in a big master plan community like this, I know it sounds silly too, but we didn't do dumpsters. Each unit has individual trash cans. You would be surprised the ownership that tenants take when they have a trash can as opposed to a community dumpster. Because, when you're showing this and when tenants are renewing leases, you don't want to drive in and see a dumpster with an old dirty mattress and a TV box tossed to the side. People and tenants, they get crazy and, you don't have to answer out loud, but you could raise your hand in your imagination if you've ever thrown something in a dumpster that wasn't your dumpster. It happens. It attracts these people. But when you do trash cans, the development is much cleaner, much more tidy. So we certainly like that. So this is something that you can reach out about. There's other stuff happening right now. Great joint venture on high-end townhomes in the Nashville, Tennessee metro, as well as our commercial flex space that's going crazy there in DFW. We've got a couple of sites underway, and we do have a site that I think we're about to get contracted in the Savannah metro. We just love that there with the port and all the industry in the area, but we'll get into some of that in just a minute. So you did great. You endured my spiel about what else we have going on. So now we can do what you came to do. Let's talk about Savannah. Savannah, Georgia. If you have not been, I highly recommend. A great city, one of the oldest cities in the United States, actually, right? It's the fourth largest container port in the US. There are 23,000 plus jobs and growing tied to port activity, and it's a pro-business area. Businesses like to be in Savannah. That means there are jobs. That means there are tenants who can pay rent. And that really is the whole point of this thing. We think you should enter it now because the window is open, but I don't think that the secret, it stays forever. You'll see that these are, in a market like this, these are good returns on solid, easy to build single family homes on concrete slabs. We don't have to overthink this, right? So it has great returns because of those jobs and those renters. The new Hyundai plant where they're doing all the EV manufacturing, 8,500 plus jobs, right, projected to come into the area, plus all the ancillary businesses associated with it. You can see why we're excited about flex space in this market too. So supply is still catching up, right? They didn't. It's not a market where they came in with massive amounts of new inventory. We deal with that in Dallas and Nashville. Absolutely, still great population growth in those, but those markets just ate a really big porterhouse steak of inventory, and it's going to take some time before we can see rent increases again. I think they'll be flat, but in Savannah, we're impressed with what we can get there. So let's give you a little bit of context, right? We talk about Savannah, we're talking about the Savannah metro, right? Making deals pencil in the city of Savannah or nearby Pooler. Those are the two bigger cities. That's tough to do. The homes are more expensive and the rents that you get for them, the price kind of outruns those. These particular properties are in Rincon. I wanted to say Rincon like in Spanish, but the locals say Rincon. It's about 20 minutes from downtown Savannah, right off I-95, and it's a big time logistics corridor. You can see 95, you take 21 right up, you see Peak, that's where the property is. A little bit past that is Effingham County Hospital, big hospital. We're in Effingham County, which is ranked in the top 10% of school districts in the entire state of Georgia. And right there, some people say, oh, Rincon, it's far. Well, it's 20 minutes. I mean, if you live in LA, you would die to be 20 minutes away from where you work. And it's not like a one-horse town. We've got Walmart, we've got Lowe's, and then you've got manufacturing and logistics. You see that Lowe's logo I have in the top left of the map. Okay, there is a Lowe's hardware store in Rincon, but there's also a Lowe's distribution center where they distribute to the region. There's a DHL center there. NFI is also a big logistics center. So big time jobs in the area and a need for housing that's just a little bit more affordable. And you can see some other notable landmarks. Like I said, if you haven't been to Savannah, you got to go, right? Take your spouse, have a fun time, go over to Palmetto Bluff or Bluffton. Those are two great places a half hour away across the river in South Carolina. There's a big military presence in Savannah. When you get to the airport, you'll see Marine Corps Paris Island, right? If you've seen the movie Full Metal Jacket, that's where that happens. That's where they train all the new Marines east of the Mississippi. The U.S. Army Third, Third Infantry Division, yes, is located in the area just down south of Henderson. Massive Army base and airfield there. You can have fun out at Hilton Head, go play some golf, billion hotels. But then in the core, you can see right around the airport all of the logistics. It's near the new Hyundai plant. Gulfstream Private Jets is headquartered there. The Savannah Port Authority or Georgia Ports is right there. Wayfair ships a ton of their product out of the area. And then just some of the more notable, hospitals, downtown Savannah. And you got to love Costco. If Costco's in the area, you're doing something right. So there's $7.6 billion of money invested into the Hyundai plant, tons and tons of jobs. And I think I've probably beat the dead horse, but the logistics, the military, the government, the transportation, the manufacturing, these are all really, really important things that I would argue it's going to be tough for AI to get rid of anytime soon. These are not jobs that you typically sit in front of a computer screen to do, which are the biggest threat from AI. So there you go. A little bit of context to the area where Rincon is in relation to Savannah. But in short, about 20-minute drive. Okay. So who's going to live in them? Well, like we said, it won't surprise you. Port and logistics workers, people that, they make decent money, but maybe Savannah, maybe Pooler is a little bit expensive. Some of these automotive and EV plant employees or all the businesses that derive from that, young families that have relocated to the area for work and they need a grassy yard and a grassy backyard and, enough space to live. And then a bajillion military and defense contractors. And I've mentioned many of these already as we've gone through the slides. And that picture there, that is the development. Those are a couple of the houses that are for sale. It's a nice, quiet development, suburban USA, just your garden variety build to rent project. So those of you, I've spoken to so many investors about this, about single family. There are people out there that think, oh, you shouldn't invest in single family. There's a problem with scale. And, they're not wrong, but if you're a new investor or if you don't worry about scale, you want to invest $50,000, single family homes are just an excellent springboard. They can cash flow really well for you. But I think new construction is great because this is a time where you can get in, you can hold the property for 5 to 7 years before the maintenance really starts showing up. And, with the way these are built with LVP floors, they're on concrete slabs, we make them so that there's only so much that can go wrong. I've done a lot of properties in the Midwest that have basements. They were built in 1940. There's just a lot that can go wrong by the nature of having a basement in that climate. And just mechanicals, they wear out. So new homes are great, I think, personally, for a 5 to 7 year hold because you run that appreciation, you ride that appreciation wave. And then before, repairs start showing up in a meaningful way, you're on to the next one. Do it again, 1031 your capital. And great part is they got that builder warranty. Anytime you build something new, even though it's new, right? A tenant gets in there, they're opening and shutting doors, they're washing dishes, they're flushing toilets. It's going to take over a few months, maybe 6 months. A few things are going to pop up, right? That's understandable. And so it's great to have that period of time where you can fix it on our dime, on the builder warranty, get that house broken in so everything is working the way that it needs to. I think those are some great benefits of new construction. And for those of you that are into cost segregation, they absolutely work for that. We can make you an introduction to the engineer that we use for that. You can really supercharge your tax strategy along with your cash flow. So let's get into the property, right? I'm only featuring 3 of them here. There are 7 total. We did reserve one last night, so we're down to 6, right? So this is on Founders Drive right there in Rincon. It's not updating on the maps yet. So if you need some guidance on how to find this thing, just reach out to me separately. Most of you know where to find me, or you can reply with the contact information that we have at the end of the webinar. So like I said, easy access off of 95. You just take State Road 21 and you're, 5-ish minutes on State Road 21. And like I said, Rincon isn't some middle of the nowhere hillbilly town. It's 20 minutes from Savannah. It's got Walmart and Lowe's and all the stuff that you would need in a suburb, especially one that has great schools like Effingham County Schools. These are 1,600 square foot homes. They're 3 bedrooms and 2 baths. We finished them up late last year. Okay. And we'll get you some great stats on the rent comps and the purchase comps, but they sell for 275 a piece. The after repair value is 305, and I'm not pulling that out of thin air. I will make the case to you in just a minute as to why that is legitimate. You'll need about a little over 60 grand by the time you put your down payment down and your closing costs, right? Have cash flow of about 315 a month. This is just keep in mind, because we sell it tenanted, the pro forma reflects no vacancy rate for the first year. But then the pro forma does phase in a 5% vacancy rate after that. So that 315 will probably dip into the high twos once you move into the second year going forward, right? And I don't want to oversimplify it, but I think this is a great way to say it. When we're buying that interest rate down to 5.375, and we'd love to go lower, but there's only so much we can work with on these. But the cap rate is 6.7, you're going to cash flow. That's why these numbers look good. When you get that spread between cap rate and interest rate, that's when the magic really happens in real estate. So, like I said, here's your capital stack, your down payment details, total cash needed. This is a 30-year amortizing loan at 5.375, and you'll be borrowing about $220,000. You'll owe the mortgage company $1,232 a month. That's just principal and interest. And sometimes we advocate to investors to not escrow for taxes and insurance. In this case, I would, right? It's a pretty straightforward deal. It's easy for lenders to do that. I mentioned that deal up in Indiana, the pre-construction duplexes. Absolutely don't escrow for that. There's a tax abatement. The lender is going to screw it up. You want that to all come out in the wash, and you handle the taxes at the end of the year. But if you escrow taxes, insurance, it's one less thing to work about or to worry about. What's likely to happen to you is once a year, the lender is going to ask you for proof that you renewed your insurance, and they'll send you a letter that says, hey, it looks like your insurance is about to expire. Send us proof. You just get that from your agent, and yeah, we can refer you one. Our numbers on this are actual insurance quotes that we got from our insurance broker in the area. And you can certainly play around with insurance deductibles, right, to see how that moves the needle. Gross rents are $2,200 a month, right? OpEx is $653. You can see your net cash flow, and that once again, the vacancy will fade in, and you can see how your expenses break down. Some of the key ratios: a debt coverage of 1.26. Like on a commercial loan, most banks require a debt coverage of 1.25. That's when they say this is a safe, easy loan. The fact that we're 1.26 shows that's a good indicator about the cash flow on these deals. So expense ratio of 29.7. And that's reasonable on a single family property. It's even more reasonable when the vacancy comes in. You get into the low 30s. I would caution you, I've seen a lot of deals floating around lately with expense ratios in the low 20s or even the teens. You should be wary. Doesn't mean it's not possible. Like, for example, once again, that deal up in Indiana, we have a tax abatement. So there's a clear reason why the expense ratio is much lower. But really, it's going to take you 30%. In most cases in Texas, it's typically north of 40% of your income to expense, to operate that property. And so the key is, can you get debt beyond that gives you enough left over at the end of the day to where this is worth your time? So when you purchase the property, there will be a tenant in place. If we sign a lease, but the tenant hasn't moved in yet, you would have the option of delaying closing, or maybe you could still, it's up to you. We'll work that out with you on a case-by-case basis. There's only 7 of these in the first tranche. There's more coming behind, but 7 of these for sure. So it's designed for out-of-state investors, right? We place that tenant. We do the first one for free, right? After that, you're going to have 80% of the first month's rent for your lease-up fee in most cases, and we'll talk to you about that. 7% management fee ongoing. And we handle everything from there. As somebody who eats my own cooking, I can tell you I spend probably less than 5 minutes a month dealing with my properties. And that's mostly reviewing the statement I get. We use a service called Appfolio that does all the accounting work. And you can just see, all right, I had a $50 repair. I had this or that. Check your bank. Did the money show up? Boom, you're done for the month. And at the end of the year, we send you your full statement, right? You'll get your 1098 from your mortgage company. If you borrowed money, you give this stuff to your accountant. It's just not a lot of time. But what investors really love about it, they can do it from thousands of miles away, but still have full control. If you want us to put this on the market, or you want to call up some agent in Savannah and have them put it on the market, that's your call, right? You don't have to wait on us for doing that. We coordinate all the maintenance. Heaven forbid we do handle the eviction side. The longer you're in this business, eventually that'll happen to you. But it means $500 or $600 in legal fees that you got to pay. But our team is the one that hires the attorney, goes to court, handles the clean out, and gets this thing back on the road to success for you. So pretty. I say that direct ownership of real estate can never be completely passive, but to the extent that it can, this is. I'm not going to spend too much time having you stare at graphs here, but you can kind of see how the returns operate over time. We're assuming a 3% in income and expenses each year. I think the magic happens with that fixed rate debt because that doesn't go up, right? Your other expenses and your income do, but that doesn't, and that's where your really great spread is made. And you can see what happens to your equity accumulation. More on the equity in just a minute. But if you hold this for 5 to 10 years, you really start to see that great equity spread while you were cash flowing, while you were getting tax benefits all along the way. Won't spend too much time here either, but you can see how it breaks out over 5 and 10, what your profits, what your ROIs are, what your cash on cash returns are, right? And we're assuming those 3% income and expense growth rates, 5% vacancy, 5% selling costs, right? And it all derives from your total cash invested of $60,500. That's where all your returns would stem from, and that's your cash into the deal. This is the cherry on top. I mentioned your after repair value. That's just a term. Obviously, these haven't been repaired. They're brand new, but you can see from our team there. And you can see that the deals highlighted in yellow are on Founders Drive. Right? Those are same development, same square footage, floor plan, everything. Anything not in yellow is in the area, but it's not on Founders Drive. We put an after repair value of 305 on the pro forma. Well, you look at those things in yellow. There's one at 299. That's still 25,000 higher. Everything else is 315-ish, right? And there's actually two at 299. The rest is 315. And then if you stretch out of there, you're getting as high as 383. So we think that there's a very reasonable case to be made that you're coming into this deal with a minimum of $30,000 of equity right out of the chute, which gives your numbers a fantastic start. I'd be happy to share this report with you so you can review it independently if you so choose. And apologies for any racket in the background. I'm working at the home office today and we've got a little bit of construction going and I think they're headed this direction. So if you'd like to talk about this, now obviously we're going to take questions in just a second. I've got a few that were emailed in, but you can snap that QR code and put your data in, and then one of our team will be in touch with you, myself or Justice Bowers or Levi Mills. One of us will contact you to get you all the details, pictures, and pro formas. Review with you what's available. Right now we have 6 of the 7 homes available. We'll show you how to reserve it, get you in touch with the lender, and get the process off and running for you. So there you have it. That's our presentation, the 7 homes in Oglethorpe Landing in Savannah, Georgia today. We try to keep these things to 45-ish or less, and we're at 30 now. So I'd be happy to entertain any questions that you have or comments. And I've got a couple that were emailed in that we could address as well. So while I look those up, does anybody have any questions that they would like to ask?
Hey, Steve, it's John Harris.
Welcome back.
Hey, 3 questions. What generally in that market is the land value as a percentage of the total investment?
That's a good question. Are you asking from what's the county going to value it at, or what do CPAs generally come in at on like the cost save?
For depreciation, trying to juice up property,
Probably,
improvements.
yeah, probably 15%.
Okay. And then generally, I know it's different. I'm on the West Coast where it's more scarce, but what is the lot size for these properties?
You know what? I don't know off the top of my head, John. I'll look it up and I'll email it to you
Not,
today.
yeah, not no big deal. Just carry. They look spacious, which is fine.
Yeah.
And then the builder warranty term is what? How long?
1 year, and it comes
What?
with your standard 210. So if there's a foundation problem down the road, that's covered as well.
Got it. Thanks, Steve.
Yeah, no problem. No problem. Thank you, John. Anybody else thinking about something?
Hey, Steve, Richard McClendon.
Oh, hey, how you doing, Richard?
Good. Hey, I know that that area is kind of a Hurricane Alley area. We've got properties down in Florida that kind of we have to watch. Do you know any additional insurance costs because of that or anything like that?
Yeah, that's a good question. Your insurance for a single family home in the metro is going to be somewhat higher than if you were to go inland for 5 or 6 hours,
Okay.
right? It's not prohibitively higher. For example, we're not in a floodplain where you've got to buy federal flood insurance and that just nukes the deal no matter what
Yeah.
on a flood insurance. So we're not in a floodplain. We're part of the Savannah Metro, and insurance companies kind of take that into their table when they price out the insurance. But Rincon is further inland, right? It's as such, it's less risk for big flooding. You could still get wind. I mean, we all remember that crazy hurricane a couple years ago that hit. I think it hit the Panhandle and went clear up into North Carolina, raising all kinds of cane. So
Yeah.
craziness can happen, but you're not right on the coast. You're 20 miles inland.
Okay.
Yep. Great. Good question. Anybody else?
Hey Steve, this is Travis Arola.
Hey, Travis.
I was curious, you mentioned there's 7 properties in this first kind of phase. How many in the overall development is planned and do you kind of have any aerial photos or maps or anything that kind of show where those are going to be built?
I can get that to you, Travis. I'll make a note when we hang up. But yeah, give me a little bit of wiggle, but behind this phase, there will be another 40. Now, they haven't started yet. The lots are ready to go, but this isn't going to be something where 40 rentals show up at the same time. It will happen gradually.
Got it. And I think too, I think it was John's question regarding the lot size. I think you might have that information actually on the spreadsheet with the highlights.
Oh, did I have it on there?
I think on the previous slide.
Yeah, we'll kind of scroll back there and see.
Yep.
Yeah, good questions, Travis. And
Oh
maybe
no, go forward. Steve, sorry, is like the last slide.
the second to last.
Yeah, next one. Sorry, back to the spreadsheet with the highlights. I think it's towards the end.
This one? Oh, yeah, there you
Yes.
go. There you go. Yeah, okay. You're looking at John, anywhere from point 1 to point 3 acres.
Yeah, that's great. Thanks.
Yep. Thanks, Travis. Good catch. You
Yeah, cool.
you lowered my to-do list count today. I appreciate that.
But, good
Yeah.
presentation. Thanks, Steve.
Yeah, no problem. Okay. Any other questions before we start to wrap it up?
So this is Jennifer. I have a question. What percentage is owner occupied and what percentage is this development all built to rent, or is there some that's owner occupied?
Actually, long story that I'll make a little bit short. It was originally slated to be a build for rent development. But like many build for rent developments that were hatched in, 2022, the Cleared Planning Commission, when they came to fruition in 24, 25, it was a completely different world. And so everything in Oglethorpe Landing prior to these 7 have been owner occupied sales. So as of now, I would say we're probably 85% owner occ.
So this phase and previous or subsequent phases will be all rentals, the 40 that you mentioned?
We have not made that final decision yet. Granted, if our investor clients are responding really well, we're loving the market, and the tenants are happy, meaning we don't soften things, we'll continue to go. But If we see a dip in interest rates, a substantial dip in interest rates, every developer can't help themselves but take in a large portion of their product to owner occupants, right?
Yeah.
And we're
Okay.
certainly not below that, right? And you know
Yeah.
what? You should do the same. If you get a property in here and rates go down into the fours, you'll make money selling to an owner occupant. It's a good off ramp oftentimes.
Okay. Thanks.
Sure, sure. I did get an email question about HOAs, and love them or hate them, there is no HOA on the project, right? The manager will work on making sure that the tenants do care for the yard, that's all up to snuff, and given that we're the manager, that makes it a lot easier. But no HOA on this project. Okay. I will give it. Any more questions, or is that about do it?
Just if you can send this deck or, what you were saying to all of us, that'd be awesome.
Yeah, we'll do it, Richard. Deck pro formas. We'll send out a copy of the recording. Now, if you want it a little faster, because sometimes it takes our team a day or two to get that together, you all know where to find me. I'll send you pro formas, as many as your heart desires, and we can set up times to review the details.
Thanks, Steve.
Yeah, you're welcome, everybody. I appreciate you joining. It's good to hear from many of you, and we'll talk to you later.